Are you tired of running behind money just to get that paycheck which gets spent on your expenses anyway? Are you longing for those returns which you can use to pay for yourself? For how long are you going to work for money instead of making the money work for you? Fear not, because today we bring you the treasure behind those dividend stocks. Before we move on, make sure you press the like and subscribe button so that you don't miss out on anything related to passive income and dividend investing. Welcome to 5-Star Finance, the place where we teach you how to achieve financial freedom. People often get discouraged during the start of their investing careers, and they end up overlooking how beneficial the snowball effect can prove to be in the long run. Everyone wants to have an asset which can provide them with a stable source of income, and for that, investing in dividend stocks can go a long way in helping them achieve passive income. So what exactly are dividend stocks and how to invest in them? Where to start? Everyone has all sorts of ideas popping up in their minds, but it's the execution and that first step which usually keeps them behind. So how do we start buying dividend stocks? The first step to getting familiar with dividend stocks is to get acquainted with a broker. A broker is simply a platform or a company that allows you to buy stocks. Many people may question which brokers should they start with. Now, if you're in the US, you might want to start with something cheap, something like Robinhood or the M1 Finance. These brokers can provide you with starting push and go a long way in getting you familiarized with dividend stocks. And if you're in Canada, Questgrade is a good place to start your journey from. People from Australia can simply begin with Stake, or a bank can also be a good option. So start by opting for a cheap but secure broker. How to choose stocks and start buying. The next step is to buy some stocks and hit the jackpot. But there are tens of thousands of stocks available. So how do you know what to buy? How do we find stocks that will perform well and give us some strong dividends so that we can live off them? There are some key points which every value investor should go through before buying some stocks. 1. Dividend yield. The main reason you started to invest in those dividend stocks is because you wanted high dividends to be paid. And if you're not getting high dividend yields, there's absolutely no point in keeping them in your portfolio. So the dividend yield is simply the price of a stock divided by the dividend acquired. Now, for example, McDonald's stock price is $247.03 US right now, and its dividend is somewhere around 5.5%. When we divide the stock price with the dividends, we get a value around 2.23%, which is its dividend yield. Another example can be AbbVie. The pharmaceutical company has a price of $153.14 and its dividend comes at 5.2. So when we divide 5.2 by 153, we get 3.68%, which is its dividend yield. Now, it's interesting to note that the average dividend yield in the US is sitting at 1.37%. So you should really go for stocks which have a yield greater than the average so you can make the most out of it. 2. The payout ratio. Another key point to be kept in mind while choosing dividend stocks is the payout ratio. Sometimes it happens that the companies are going through some financial constraints. In that case, they're usually paying off all their earnings as dividends and keeping nothing for the companies to flourish. This can have significant consequences in the long run. So every value investor needs to stay clear out of such traps. Now, every company needs to invest in the business so that their business keeps on proceeding. For example, if the company is paying 40% as dividends and keeping 60% to reinvest in the business, then the payout ratio will be 40%. And sometimes when the business is paying out 80% as dividends and keeping 20% to reinvest in the business, the payout ratio is 80%. You get the point, right? There needs to be some amount in the stock so that the stock can use it to expand and grow. Now, most of you will be thinking that isn't beneficial for the value investors to receive substantial dividends. If the company's payout ratio is huge as compared to the amount reinvested in the business, it should be understood that the business will not have long-term benefits, and sooner or later it is bound to see failure. Here's an example to understand this more clearly. Apple did not pay a dividend to their investors for more than 15 years. That also means that they kept on reinvesting in the business until their business grew so strong that they could afford to pay out easily. So you don't want a stock that pays huge dividends and is not expanding, because it is bound to decline at some stage. Find that appropriate balance in the payout ratio. 3. Dividend history. Imagine you get in a relationship. You want to know everything about the other person, right? You want to sneak peek into the person's history. You want to know literally everything about the other person. The same goes for those dividend stocks. If you want some passive income coming out of those dividend stocks, you want to know about their history before putting your money in. Now, that's quite easy. All you have to do is go type the name of that stock you have on your hit list and look for those micro trends. For example, let's just take McDonald's because everyone knows about it. All you have to do is type McDonald's dividend micro trends. You have the trend in the dividends over the last year. If you're confused which trend you need to go for, you need to look for a consistently increasing curve or trend. This shows us whether they're reliable or not. 4. Business model. The next important point is to look into the business model. What Warren Buffett recommends is that you need to look for a company that has a competitive advantage over the other companies. For example, Buffett bought Apple stock some 5 years ago. What was the reason? The reason was that Apple was producing high-quality products that were very much in demand, and over time, they just increased their profits. This means that Apple has a competitive advantage over other companies. Another important example can be the Coca-Cola stock. Buffett bought it in 1988 because he observed while walking that there were more Coke lids than any other beverage. That meant that Coke had a competitive advantage over other companies. Whatever stock you're going for, make sure that your stock has a competitive advantage over other companies and has a good business model. 5. Top line. What is happening to their revenue? Are they even growing or not? Aren't they expanding? These are some important questions to be asked. For that purpose, you'll be needing your search engine again. Simply go to Google and type your stock. Let's take Microsoft for instance. All you have to do is type Microsoft revenue history and click on the Macro Trends website. You'll see the revenue trends. In the case of Microsoft, their top trend has been performing brilliantly over the past few years. They went from 59 billion to 140 billion over the course of a few years. If the revenue line is going uphill, that means the stock you're going for is a good buy. 6. Bottom line. Along with the top line, you also need to familiarize yourself with the bottom line. To look at the bottom line, you need to stay on the Macro Trends website and click on the earnings per share icon. This will show you about Microsoft's earnings over the course of the last few years. You will see that in the case of Microsoft, there have been very few setbacks, but overall, they're doing tremendously well. Now, it is important to note that not every dividend stock you're going to look at will look as nice as Microsoft. For that purpose, you need answers for questions like, will they consistently increase revenue over the course of the next 10 to 15 years? 7. Management. As Charlie Munger says, you should always go for managers with integrity and talent. For that, you need to be watching their interviews and looking at what they write in their annual reports. Look for questions like, are they being honest? Are they talented enough to bring gains? Do they know their business inside out? It's good to read and research about them so you get those honest managers you're looking for. These are some key points you need to understand for dividend stocks. So what do you think about these points? What stocks are you planning to go for? Are you planning to live off dividends? Let us know in the comment section below. In order to get a deeper understanding of dividend stocks, make sure you refer to the free ebook in the description below, which will explain the 6 stock categories that are each different to analyze. Subscribe and turn on notifications. Check out this video we handpicked for you, and we'll see you in the next one.